So the state government side, normally if you save 6 times that you have to export in a period of 6 years. So other two schemes are one is rebate of state and central levies and taxes. One is rebate of state and central levies and taxes. This is mainly for made up articles and garment industries there. Uh, Before that, one more. This is one is the ROTTEP scheme is there. Remission of duties and taxes on exported products. Actually, earlier we have MES, Merchandise Exports from India scheme. Now that is being replaced by this ROTTEP scheme, Merchandise Exports from India scheme. Now that is being replaced by this ROTTEP scheme. In this ROTTEP scheme, actually there are some means in this ROTTEP scheme, actually there are some means the main purpose of ROTTEP scheme is that export should not be taxed. Whether already there are some that there are any some taxes being levied by 18 level, so that even that taxes also can be means availed from this ROTTEP scheme, but it is standardized rates. Actually headquarters, DGFT headquarters decides based on consultation with the exporters what are the rates. Based on that, at that standard rates will be given to exporters in this ROTTEP scheme. Again, this is one is rebate of state and central levies and taxes. This is mainly for garment industries there. Apart from this interest equalization scheme, you are aware that in this interest equalization scheme, for in all the product lines, whatever product lines are in all the product, MSMEs will get interest subvention. But there are for other exporters, there are specific HS lines. So on those specific HS lines, exporters can get interest subvention. So these are all actually export incentive schemes, but nowadays DGFT and Department of Commerce focusing more on trade facilitation and means ease of doing business. So with that intention, some of the measures taken by the DOC and DGFT is like now DGFT is operating on a single online portal. Means there is we are completely dispensed with submission of manual documents. All communication and all correspondence will be through only single online portal is there, and we have introduced paperless filing and electronic communication. And I think the most useful measure for exporters is EBRC. So earlier you has to get approach to banks. Now you can get you self certify EBRC, and banks will send that electronic inward remittance messages to based on this is PAN. It is linked to PAN. Again, IEC code is linked to PAN. This is also linked to PAN. So the exporter himself can generate EBRCs and he can self certify. So this is one of the very means it has reduced most of the time of the exporter, and also it is streamlined the business processes. And also now there is seamless integration is there with DGFT portal and customs portal IceGate, and also with banks also to get and to receive these EBRCs and for receiving the messages. Now DGFT introduced now Gensunwai. Gensunwai means actually it is daily in the DGFT has around 24 regional offices and headquarters. In all headquarters and regional offices, every day it is 10:30 to 11:30 there is video conferencing facility. So any exporter or importer can log in, and they can whatever their grievances or whatever their application status, they can log in and they can inquire on the DGFT portal. And we are conducting Niryat Bandhu scheme. The purpose of Niryat Bandhu scheme is like it is to mentor new and potential exporters regarding the what are the foreign trade policy measures and what are the new initiatives taken by the DGFT, and also handhold them to and to improve and increase the awareness on foreign trade policy measures, and like what are the free trade agreements and benefits of free trade agreements. Under this we are conducting Niryat Bandhu programs. And recently what happened, because of as the trade increases, there are also some complaints regarding commercial complaints and quality complaints are also increasing, both that is both from Indian exporter importers and also I think for foreign export importers. So to resolve those disputes, DGFT has launched one quality complaints and trade disputes portal. There whoever it can be available to both foreign and Indian traders. They can lodge their grievance with the it is also available on the DGFT portal, QCTD portal. There means if it is our Indian trader, then we will forward that complaint to the abroad missions where that against whom that complaint is there. In the same 50 crore. The initiative aims to mainly facilitate seamless access to export credit and enhance cross-border factoring services, and also to tackle non-tariff barriers, any non-tariff barriers there, any support is required. And one of the objective of export promotion mission is to help exporters in means dealing with non-tariff measures. Apart from that, now one Bharat Trade Net portal has been launched. So Bharat Trade Net portal is that is also mainly for trade documentation, digitization of trade documents, and also for again to provide trade finance support. Mm. And because if you see these BharatNet and is on the lines of like we have Singapore, EU, there it is completely digitization. Now we have to file bill of lading and most of the documents that now recently government has also introduced a bill, and that is also been passed by the parliament, bill of lading bill. So these measures allow that digitization of trade documents. So when digitization of trade documents is enabled, it will allow means like it will enable to access more trade finance based on the digitization of documents, such that the manual processes will reduce, and it will also increase transparency. And the main important thing is it will promote ease of doing business to the sector. And if you see the trend, when actually this year also we have mostly non-petroleum pharmaceutical products, engineering goods have seen a upturn incentive exports. Like we have now quality control measures is there. After initiation of this quality control orders, many of the imports have reduced because quality control orders will standardize. They will standardize. They will means they will improve. They will set some standards. So otherwise, with that, what happens? The dumping from other countries to India will reduce. So now government is continuously encouraging exporters to means improve quality in their products, such that uh, to shift. Main thing is shift, instead of depending on financial incentives, we should more focus on our product. Like it should be quality product, because that there is a demand from foreign countries for quality product. When we have quality, so the financial where taxes are, that will be means will less matter. Like that, now government is improving mostly on the quality related aspects. So and it is we are all aware that even India also the startup culture, and we are one of the third largest startup industry and entrepreneurship. If we see IECs, I think the IEC's main import exporter code, which is first thing for to export or import things. The continuously even Telangana also the means taking IECs, registering of IECs increasing. Even at India level also, means more entrepreneurs are coming into foreign trade now because of and e-commerce. There is also very large scope e-commerce, and e-commerce also you require that IEC. So many of the people are coming into trade, foreign trade. And even state and central governments also very encouraging exporters, and they're also state and central governments every time coordinating to taking measures. Like if you see, we have started district export plans. Even we are promoting exports from even districts also. And with FIEO we have organized many meetings in the districts to means because there is a already potential is there in the districts. But thing is that some awareness if is required and some push is required, that our state governments, central governments are continuously doing. And also even we are commonly collaborating with FIEO, and we are doing programs under Niryar Bandhu to encourage and to promote exporters in the districts. Uh, so I think with this all combined efforts, I think we will definitely achieve the $2 trillion target, export target set by the Prime Minister. And I once again thank you, FIO, to giving this opportunity, and thank you all participants to question us.
We have been receiving encouraging support from the DGFT officials here, and regularly participating in the programs and collectively making efforts to enhance exports from the Hyderabad. Not only from Hyderabad, we are moving to districts also. And as said by Mr. Ramesh, there are district level export promotion committees where collectors are the chairman and DGFT local representative is the co-chair for that, and FIEO is also actively participating in the district export promotion plans. So the districts have chalked out their action plan for the next few years, and they have also decided on the product for which there is a need for focus and the value addition required for the scaling up that activity, and make it globally those products from the districts. So I thank Mr. Ramesh for being with us and addressing on the export policy and schemes. He has to go to his office, so I present a small memento to Mr. Ramesh. Thank you. The next session is on export finance, and which is very much required for everybody, in fact, in the industry also. And everybody look for the various financial avenues offered by the various banks and financial institutions. We have with us representatives from India's leading bank, State Bank of India. Export finance is crucial for international trade as it provides working capital, mitigate risks, and facilitate market expansions, enabling businesses to compete globally and manage cash flow challenges. We have with us Mr. Navin Reddy, Manager Treasury, and his RTMU team of State Bank of India, local Hyderabad office, who will be briefing on the financial avenues. I once again welcome you and address Mr. Navin Reddy to participants.
Good morning, everyone. Once again, I'm Naveen Reddy, Relationship Manager Treasury from State Bank of India. I welcome Dr. Sri D. Ramesh Garu, Sri A.B. Mishra sir, and special thanks to Kulkarni sir for organizing this event, and again a special thanks for all the audience to make it a large gathering here. Yeah, so before going into the presentation, I just want to show you an interesting snapshot on how the how the exports and imports scenario in the overall country and especially in the Telangana state. So if you can see in the slide on your left hand side, you see that the overall export scenario in the country is quite stagnant. If you see in the financial year 2024, it is somewhere around 770 billion. Compared to again in the financial year 2023, it was almost in the similar levels. But again, when you see the export figures in the Telangana state, you can see here almost a jump of around 25 to 30%. So it clearly shows that the environment, especially the industry environment here in the Telangana is quite positive compared to the overall country. At least the numbers say so here. During my conversation with various industry bodies, with various companies, primarily in the pharma sector. Many of them are bullish in the next 2 to 3 years, especially the pharma sector. When I had a conversation with some of the big companies like Divis or Laurus Labs, they have invested quite a lot in the last 2 to 3 years. In fact, many of them have they have a plans that increasing their capacity utilization to 50 to 60 percentage. And yeah, as again you can see here in the slides, it's no surprising that the drug and pharmaceutical industry, it is almost contributing 40 to 50 percentage of the overall merchandise exports in the Telangana sector. So I do believe that in the coming years, the percentage of drugs and pharmaceuticals is going to improve quite a bit, and I'm not sure whether that is good to the entire state or not, because I believe there is concentration risk when you are focusing too much on one industry. Again, even when you see the large, the overall exports, it is just happening in and around Hyderabad district, especially in the Rangareddy, Medchal, Malkajgiri, and Sangareddy districts. I think this is high time that the policy makers should seriously have a look, and they can diversify both the location and the sectors. I truly believe that. Now, just again going to the export finances, I just want to share you the overall picture of how the foreign exchange dynamics work. I just want to share you how a dealer sitting in State Bank of India, in the Central Treasury, how he looks the overall events and how he takes position in the market. Now, again, in the left-hand side, in the top left-hand side, you can see the overall inflows and outflows. It's no-brainer that the exports and imports affect the overall exchange rates. But again, many of them, overlook the role played by the remittances. Now, if you again go back, the exports and imports overall, it is somewhere like $1.6 trillion. Again, the remittance, if you see the remittances, it is almost $130 billion. Now, India, as we know that, I mean, we are the largest recipient of remittances, almost double of what Mexico receives. Mexico is our second largest recipient of remittances. We are almost receiving double of what Mexico receives. Now, if you combine both and take out the percentage of the remittances that India receives, it is almost contributing to 1/12 of the overall the overall trade and remittances combined. So one cannot ignore the remittances part. Again, the investments and loans, most of us, I mean, ignore this. I mean, we tend to overlook the investments and loans and how it actually affects the overall exchange rate mechanisms. Because it's not often that India receives a 1 billion or billions of dollars investments on every day. Exports and imports keep on happening almost on day-to-day basis. But it is when India receives a substantial portion, let's say that, I mean, Adani, it wants to raise 1 billion ECBs. So almost within a week or so, that 1 billion, it hits the market. Whenever it hits the market, I mean, you can see a sudden spike or sudden appreciation in the rupee. So one has to, I believe that one has to have a clear eagle's eye on what is happening, I mean, when it comes to the investments and loans portion. Again, recently, I mean, FPI and FDI flows, I mean, these are clearly making a wave. If you just pull out a graph and how the rupee is depreciating in the last 2 years compared to the outflows, the FPI and FDI outflows, you can see a similar graph, I mean, reflecting in both. In the last 2 years, I mean, you might have noticed that, I mean, rupee has depreciated around 2 to 2.5%. Similarly, I mean, the FPI and FDI flows also, I mean, went out of the country. Something I do believe that there is something happening in India which the FPIs and FDI knows. It's not that, I mean, they have seen quite an interesting investment in other emerging economies. I don't buy completely that. Maybe something the policymakers I mean, needs to address their issues. Again, IPOs, I mean, recently, I mean, with all the, this new age technology companies, especially the Zomatos and Swiggy's coming into the IPOs market, and these companies, I mean, are quite a bit attracting all the foreign flows. So again, this is one of the factor that one needs to take in mind whenever, I mean, they're taking any position in the market. Specifically, I mean, whenever they want to go for export forwards or import forwards. And the other important factors that somebody, any exporter or importer needs to bear in mind is the price of commodities. As we all know that, I mean, we are primary importer of this crude oil. I mean, we almost import 87% of our needs. If you convert it into dollars, it is somewhere like 130 to 140 billion dollars. So as I said earlier, I mean, our total exports and imports combined is 1.6 trillion. So this itself is somewhere like 7 to 8 percentage. So any spike in crude prices, so that again needs to taken care of whenever you are taking any positions. Not just that, maybe you can see how the Chinese economy is performing, because China, as we know that, I mean, it's a huge importer of, it's a huge consumer of this commodity, especially the coal and the crude oil. So whenever you see that Chinese economy is slowing, you can simultaneously see that the commodity prices going off. I mean, it's cooling off. So that is again a little positive, because that again, as I said, primarily we are net importer of crude prices. So that is something positive for the INR. Again, actions of major central banks, it is one of the major factor that one needs to be taken care of whenever you are in exports or imports. If you can see in the last 2 years, from 2022 to 2025 till now, you can see how the US central bank, US Fed, how they have increased their interest rates. It's like 75 basis points and 75 basis points. So what happened is that in the last 2 to 3 years, the rupee has depreciated quite a bit, because whenever an investor finds that US bonds are yielding a higher percentage, why will he wants to invest in emerging country with a lot of risks, want to invest his money in India and get returns like 7% or 7.5%. So something that, I mean, we need to we need to take care of. Again, geopolitical conflicts, it's no brainer. Geopolitical conflicts, wherever it happens, it doesn't need that, I mean, it should happen in India only. In the last 4 or 5 years, I mean, we have all seen how the Russia-Ukraine conflict and the present ongoing Middle Eastern conflict, how it actually affected the exchange rates in India. If I remember correctly, those were the times that I've started my career in Treasury in the year 2020 to 23. So everything was calm and the rupee was trading somewhere like 75 to 78 levels. Suddenly this Russia-Ukraine conflict came, and just within a span of 1 week, the rupee has went from 78 to 82. So that is a volatility that one needs to take care of whenever you book forwards. I mean, it is you need to take care of your MTM losses too. I mean, whenever these black swan events happen, it clearly, I mean, affects your position. Again, the inflation, GDP growth. Again, countries like India, we need to manage our inflation in such a way that, I mean, it doesn't run off. Because not many investors find comfortable investing in an economy where inflation is going out of bounds. So something that we need to take care of. Again, domestic factors, I mean, we keep on ignore the domestic factors. One is political stability. Let me tell you a quite an interesting story. You might have all seen the India's general election, which happened in last year in the month of June. So one interesting scenario has happened. If you are follower of stock markets or exchange rate markets, what you have observed is that after the last day of election, in the evening we do get these exit polls. So most of the exit polls, they were predicting that one major political party, it will get a landslide victory. So which is actually a benefit. People were assuming that, I mean, it is pro industry and all stuff. So people next day, I mean, all the stock markets, I mean, it went up by 2 to 3%. Exchange rate, I mean, INR has appreciated by 1%, which is quite a bit thing. So everything was looking rosy. But on the election day, when the result came the otherwise, when people were expecting that it will get a comfortable majority in the parliament, but when it didn't happen, so what happened on that day is that stock market went down by 4 to 5 percentage, and the currency has depreciated by 2 to 3 percentage. So these are all the factors that one needs to take in care of when you are in exports and imports. And even now, after in the last 3 months, you might have seen how especially the news from United States after the new Trump administration took over office, how every day it's like an event of especially in the exchange rate and the stock market. Again, fiscal policy and monetary policy and balance of payments. Thankfully, I believe that our policy makers and especially the central bank is doing quite a good work when it comes to managing the monetary policy, and even the central government also. It is strictly following the fiscal responsibility. Again, the participants, I just want to touch upon the regulators part, because most of us, ignore what a regulator can do it. See, regulator, the central bank is sitting with almost 650 billion worth of reserves. So whenever it wants to intervene in the market, it doesn't come with small chunks like 100 million or 50 million. It really disrupts the market. It comes like very recently, it came with a 10 billion swap. So imagine the average turnover in India when it comes to the exchange rate is like $20 billion. So imagine a 10 billion swap coming into the market, hitting in the market. How it actually affects the overall exchange rate, how it clearly disturbs the market is something that we need to be very watchful of. So as I said earlier, this is one of the key events that one needs to take in care of when you are in exports and imports. As I said earlier, US Federal Reserve, it has raised from 0% to 5.5% in the last few, their monetary policy meetings. They have decreased by half a basis points. But again, I believe in the last 50 to 60 years, it never happened that just within a span of 9 months, the interest rates shot up from 0 to 5.5%, clearly disturbing all the other currencies, all the major economies. And one key interesting thing is that whenever you're in exports and imports, especially the dealer who is sitting in a big bank central treasuries, he'll not just look into the US, the actions of not just the US. They will also look into what other central banks or what other major central banks were doing, especially the Bank of England, the European Central Bank, and the Bank of Japan. Again, one key interesting thing happened just 6 months back. Bank of Japan, we know that they're maintaining their interest rates, like they're for a very long time historically they're maintaining negative interest rates because their country is in deflation, and they somehow they want to come out of that deflation trend. So what happened is that after this Russia-Ukraine war and after this Middle Eastern war, their inflation has shot up. So in order to control their inflation, they have increased rates. So I think 4 or 5 months back, what they have done is that they have raised their interest rates from 0.1 to 0.25%. So generally, what major corporates do is that they go for carry trade. So what is this carry trade? It's simple. They raise loans, they raise funds from Japanese banks, because Japanese banks, as you know that they do offer, they do provide cheaper interest rates, and they do invest in higher yield currencies like US bonds or Indian G6 or Indian treasury bills. Now the logic here is that what they assume is that the difference between their the interest rate differentials and the currency depreciation. So in that they want to make money. So what happened here is that when the interest rate, when the Bank of Japan interest rate has increased, it actually appreciated their currencies. So most of their, most of them went into losses, and it actually created a ripple effect where people, where their stop losses got triggered, and it actually created a ripple effect. And even the Indian stock market also, it crashed like 2 to 3%. It's not a big crash, but again, it do affect the Indian markets too. Although it does not we are not much connected to Japan or after any to their banks. Again, from SBI, I mean, we do offer all these products. I mean, when you see in the forex market, I mean, we do provide the spot, forwards, crosses, derivatives, and swaps. So as you know that, I mean, SBI, it almost has a 20% of market share when it comes to dollar INR pair, and we are a significant player even when it comes to crosses, because we are present in 40 to 45 countries with almost more than 230 foreign representative branches. So we do have significant presence when it comes to other currencies too. Again, in trade credit, we do offer PCFC, export packing credits, EBR bill discounting, buyers credit, suppliers credit. In the money market products, I mean, we are like the big boy in the market. We have quite a substantial investments in commercial papers, non-convertible debentures, overnight index swaps, GSECs, and treasury bills. And even in the other financing also, we are a primary player in when it comes to external commercial borrowings, ECBs, and FCNR demand loans and term loans. I'll explain these products in my later slides. Now, if one thing, I mean, if you can ask whether going for hedging is either it is a beneficial or not, so there is no one right answer. Now, if you see that, I mean, one might argue that, see, my business is completely different. I don't want to take any position. I don't want to keep my position open to exchange rate risk. Then maybe in your scenario, it is better to go with hedging. But if somebody wants to benefit from the exchange rate movements also, maybe for them to keep their positions open might be a good idea. So again, how can you go if you want to do a hedging? I mean, what are all the products that you have in the market? Again, you have options, you have forwards, again you have swaps. So all different products, I mean, which will help you in mitigating your various kinds of risks. In the forward market, I mean, we have forwards for in the dollar INR pair and even in the cross currency pair also. Again, in the options, I mean, we do offer plain vanilla puts, calls, and cost reduction structures too. Again, if you want to go for exotic structures, we have this POS, principal only swap, interest rate swap, coupon only swap, and the CIRS too. Again, export finance pre-shipment. I just don't want to discuss in detail about these products. One thing that I want to explain to you, which is very much, it might be helpful for you, is that whenever you avail this EPC in rupee, I believe that, I mean, you can actually you can actually go for your export receivables forwards, because what is happening is that, let's say that, I mean, your EPC interest rate is somewhere like 7.5 or 7.6%. If you go for a export forward, that itself will give a yield of 2.5 to 3%. Now your net interest rate will substantially come down to below 5%. So something that you can take advantage of. Again, the disclaimer that I think it actually only works when there is relatively calm in the market, when the volatility is a little low. Maybe in that time, I mean, you can go with these strategies. Again, in the PCFC, again, you can take when you know that, I mean, you will be availing PCFC in the next 3 months or 4 months. It is better that, I mean, you hedge your PCFC disbursements, because you know that, I mean, you will be availing PCFC after 3 months or after 4 months, and you also know that, I mean, you will use that PCFC in your domestic operations. So for that, I mean, you need to convert your your dollars or in your euros or Great Britain pounds. So you know that, I mean, you want to convert that into INR. So better strategy is that why not you take a forward, so that, I mean, at least, I mean, you will be benefiting with that forward premium. Again, all this comes with a disclaimer. I mean, whenever there is relatively calm in the market, I mean, you can go with these strategies, because when there is too much volatility, like what is happening in the last 2 to 3 months, I believe, I mean, it's better to keep your position open than going with a hedging. Again, in the post shipment, we do provide this negotiation or purchase discounting in rupee and export bill rediscounting. again, as I said earlier, when you know that you have to pay your INR liabilities, it is better, to hedge that liability, because your receivables will be in dollar and and your liability is in INR. So better you hedge your receivables. So that will be a great strategy to implement in your companies. Again, ECBs, we are a primary player in ECBs. As I said earlier, we are present across 29 to 30 countries with a 230 to 240 foreign offices. So we do provide the ECBs facility. You can avail through our bank, or if you have availed in other banks and want to hedge your ECB liabilities, and that also we do. This is quite a popular product when it in the larger corporates. Even if your firm is more than 100 crores and has an external rating of AA and above, maybe you can explore going through ECBs also. Other popular product, that is quite a bit doing rounds is the FCNRB term loans and demand loans. So the beauty of this product is that you don't need to be an exporter or an importer to avail this facility, because even a company which is purely into domestic also, they can avail this FCNRB facility. But again, with hedging, if you are into exports, then there is no need for hedging, because you have a natural export proceeds, so there is no need for you to go with hedging. But if you are primarily into domestic market, if you are primarily into domestic sales, then it is better. It is actually compulsory for you to hedge your liabilities. So at present, as you can see, the 6 months so far, it is at 4.2%. And let's say that your spread is somewhere like 2 or 2.5%, and the forward premium right now which is trading in the market is again 2.5%. So overall, if you combine, maybe you can reduce your liability, your INR liability, to less than 9% or even better than that. So again, you can explore these products. But again, the thing is that getting funds is a little bit difficult, because again, FCNRB loans we can give only on FCNRB deposits. So before taking FCNRB loans, I request your relatives or your friends to make deposits in SBI in foreign currency. So again, other beautiful product that not just SBI, all over banks that are offering is the FX retail product, which is actually developed by CCL, Clearing Corporation of India Limited, and which is regulated by RBI. This is actually an RBI product. The beauty of this product is that when you are a small time trader, you generally don't get the interbank rates. The dealer, because you will be dealing with a 250,000 or less than 250,000. But for an interbank dealer, to cover that, he needs to wait till his position goes to 1 million. So in order to avoid this, in order to give better rates to even smaller players also, what RBI has implemented is FX retail platform. So here is that whatever SBI is getting rates in the interbank, you can also avail that rate through FX retail platform. Again, the minimum transaction that you can do here is $1. So that is again very much beneficial. Maybe if you're an exporter or importer, you can explore this platform. So it's a simple documentation, nothing much is required, just an application and then stamped indemnity. Within just 1 or 2 days, your credentials will be given and you can use this facility. So as sir said, we are from a treasury team. Our team sits at SBI LHO office. So maybe if you're an exporter or importer, anytime you can get in touch with us. We'll distribute our cards to you. So yeah, so that's our presentation. So thank you so much. Thank you, Kulikarni sir, for doing this.
Thank you, Mr. Naveen Reddy and RTMU team. We recognize the presence of Mr. K. Madhukar Babu, Joint Director, Industries Department, Government of Telangana. Thank you for joining, sir. Now we understand the export policy and schemes and also the financial avenues. Mitigating credit risk is an important and we have representative from ECGC to enlighten us. The Export Credit Guarantee Corporation, now it is known as ECGC, plays a crucial role in international trade by providing credit insurance, mitigating risks for exporters, and facilitating access to finance, ultimately promoting India's exports. We have with us Sri A.B. Mishra, AGM and Branch Manager, Branch Head, ECGC Limited, Hyderabad, who will be enlightening us on role of ECGC in international trade and understanding credit risk. I once again welcome you and address the participants.
Good afternoon, everyone. I'd like to say thanks to Sri Kulkarni sir for organizing this session, and welcome to all the dignitaries on the stage. Ramesh sir has already left, and Naveen sir for giving an insight to the forex part, which is an integral part of any of the exports, and all the participants present here, because it's you who form the backbone of the country. We have seen in the morning the DGFT giving the presentation on the different sources, different schemes, what are available for the exports. We have the bankers who is ready to lend you to do the exports. But how do you repay them? And the risk associated if you cannot repay them. Because quite sure nobody is going to leave the money. The bankers won't leave it. The DGFT would clearly say it's the scheme that they had given, but they are not responsible for the money. So here comes the role of ECGC, who is there to protect you, to take care of you, to help you out in times of distress, to help you out in growing your business. So I'll just take you through the presentation and how it helps an exporter in the current business scenario. Well, we were set up in 1957. That's around 68 years back. We are the pioneers of the credit insurance in the country. There are many other insurers, but yes, I would say that we cannot be matched by anyone. We are 100% owned by the Government of India. So we are purely a Government of India company with no stakes from any public or any other entities. We are regularized by IRDA in the same way as banks are regularized by RBI. So yes, IRDA is our regulator who are keeping an hawk's eye to what we do, how we do, to all our products and services, and what we provide to the exporters and to the community. We are the premier export credit agency of the country. We have been awarded as the best export credit agency in by the world in the world. And yes, when it comes to the claim paying ability, because insurance is what? Insurance is a coverage against the unknown risk or the unknown peril. Yes, we have been given the highest rating of IAAA by the ICRA for our claim paying abilities. Coming to the vision and mission, yes, our vision and mission is to provide exports through various schemes and to help the exporters through different trade related activities. Now, coming to the role of ECGC. As we said earlier, we were named Export Credit Guarantee Corporation of India. Now we are just ECGC. Our main role is to provide promoting exports through various schemes. I'll just be giving a brief on the various schemes that we have in the later part of my slide. But yes, we have been promoting the exports because when it comes to the export, as I said earlier, there's always a risk of the non-payment. So we provide you the coverage to those non-payments that you may expect over a period of time. Then we have two verticals. So we provide the credit protection to the banks also, because whatever advances that the banks have lended to you, exporters, and you further use it for the manufacture of goods and services for a foreign buyer. In case that payment doesn't come to you, then it comes down to the non-payment to the bank. So we provide the coverage to the banks also. And other trade related services like we tell you about the buyers, we tell you about, even in a personal meeting, we tell you how to go ahead, whether you should do a particular business with a particular buyer or not. We have different schemes wherein we help the exporters. As you could see, we are spread across the country. We have 46 branches and 4 regional offices. So wherever in the country you could find an export center, you will find ECGC there. Yes, definitely. As Kulkarni sir said, that wherever you go, you find SBI. In the same way, wherever there is an export center, you will find ECGC over there. Now about our products. Yes, we have 2 verticals. One of the verticals which supports the policy exporters and the other which supports the bankers. The vertical which supports the exporters, we call it as a policy business. Whereas which supports the bankers, we call it as an ECIB business. That's the export credit insurance to banks and export credit insurance to exporters. As you could see, yes, we are covering all the products unless and until that is banned by the government of India or DGFT. We have a fair amount of share. Yes, if we go by the present branch, as Mr. Naveen said, that is pharma sector is the major sector. Yes, if we go for our Hyderabad branch, yes, our major coverage is on the pharma sector. But as a whole of ECGC, yes, we have a fair amount of coverage. As you could say, engineering around 29%, agriculture 23%, chemicals and pharma 20%. But this 20% is mostly from the Hyderabad branch and to some extent to Chennai branch. Now coming to the, I'll be taking you through only through the policy part, wherein we are the risk that is being covered for the exporters. Any export transaction involves 2 types of risk. One is the common commercial risk, that is the risk which is inherent on the part of the buyers. And the other is the political risk, which is inherent on the political scenario of the country. So commercial risks are those risks wherein the buyer is directly responsible for non-payment because of certain factors. So what are the factors? One is the willful default. Willful default is that the buyer has given you an order, you have sent the goods, and on the due date, buyer stops responding to you. They are not responding to your calls, emails, and the due date crosses and you don't get the payment. They don't respond to anything. So that is the willful default, that the buyer has taken it on credit and on the due date, they are not making you the payment. Other one is the insolvency, which is most common in US and European countries. Overnight, they declare themselves as an insolvent, set up a new entity and start the business again. So yes, it is generally said that the transactions to US and Europe is safe, but our record says otherwise. We have been paying the highest claims in US, European countries, Italy, Middle East. Whereas if you go over to the South African countries, West African countries, yes, our claim paying has been less. So insolvency of the buyer, wherein buyer has gone insolvent and your payment is struck up, we cover that risk. Another major risk that we cover is the repudiation risk. This risk is not covered by any other insurance in the country. What does that mean? You have got an order, you have manufactured the goods, and you have sent the goods to the buyer's country. But when it reaches the port, the buyer refuses to take the delivery. It could be of many factors. The demand has gone down, the cost has gone down, or they don't want the goods at all. So the goods are with you, the documents are with you. You are still the owner of the goods, but now you are suffering a loss. So what are the losses that you are going to suffer in this transaction? Is a transit cost, shipping cost. You would have to pay the demurrage at the buyer's port. You would have to pay the holding cost. In case if you don't find any other alternative, you will have to bring it back. So the cost of shipping liner, demurrage, holding, insurance and other things that you have incurred is the loss that you had occurred, even though the goods has not been sold, but this is the loss that you incur. It could be that you may find a different buyer in a different country who would take this good. They may take it on a discount. So that's the discount is again your loss. So yes, ECGC covers this risk and the losses that you have incurred because of this repudiation of the goods. Means the buyer has refused to take the delivery of the goods. Additionally, we also cover the risk of the default of the LC opening bank. It is generally said that LCs are the safest bet, but when it comes to the countries like Bangladesh or Western Africa, they are not as safe. Bangladesh, as on date, we have around 17 banks who have defaulted to our exporters who are holding our policies. And that includes even the large named banks. So yes, they are not the safe. So we even cover the discrepancies raised, but it has to be the major discrepancies. Now, what's the major and minor discrepancy? Major discrepancy is that the LC says that you have to make the shipment by 20th of March. You don't do the shipment by 20th of March and you do it on say 5th of April. Now it's on the mercy of the bank and the buyer whether to accept it or not. So this is a major discrepancy that you have not fulfilled the terms of the LC. Minor discrepancy, the name is changed. Chennai becomes Madras, Madras becomes Chennai. That is a minor discrepancy. Or full name has been shortened and a part of the name is just in initials and another. So that we can take it as a minor discrepancy. So those discrepancies are also covered. Coming to the political risk, which is the riskiest thing in the current global scenario. As you could say, Russia-Ukraine war, no one has predicted, but all of a sudden it came. Israel-Gaza, it had come all of a sudden. And as Mr. Naveen was saying, we are in a Trump era now. We don't know what's going to happen the next day or the next moment. So yes, political risk is another major factor which is going to affect the transactions across the globe. So the major political risk that we cover is the war, wherein two countries have gone into a war and your money is struck up. You are not able to get the amount back. The buyer is not at fault. It's because of the country war. Yeah, so we covered that risk. Transfer delay. There is at times it happens that there is a shortage of foreign currency in the buyer's country. Even though the local currency is available, but the currency of export transaction, that's the dollar or the euro, is not available. So the money is not about to be repatriated. So in those cases, we cover that risk. We'll make you the payment, and whenever you get the payment, you just have to repay it to us. Diversion of voice. Maybe the route is diverted. Earlier, the shipping cost was say around 3,000 USD. Now, because of the diversion, the cost has increased to 4,000 USD. This could be because of many other reasons, like the country has banned. No, we will not allow this particular ship liner to go from this country, or there could be any other attack. So because of that, the diversion has taken place and the cost has increased. So yes, we cover that risk. Import restriction. You had an order from the buyer. You have sent the goods, but by the time your goods reaches the buyer's country, the country has put in certain restrictions that we don't accept this particular goods from the India. So again, the buyer is not at fault, but because of the restrictions put in by the country's government, you are not going to get the payment. So the losses that you suffer because of that is covered by us. Now, this is one of the most important thing, the risk not covered. As we said, we cover most of the risk, but there are certain things which we don't cover. The first among them is the dispute. It could be any dispute, but mostly it's the commercial dispute. How does the dispute rise? You have sent the goods, it's not as per the conditions mentioned in the order. So that's the dispute that has come up. I had asked for an X item, but you have sent me X plus 1 item. I don't need it. I need only X. So that's a dispute. You are going to suffer a loss. So that is not covered. How do we handle this? We always say that make it a point that whenever you get an order, there is a condition that it could be a third party who is involved in between, who says ki, yes, all these goods are as per the conditions mentioned in that. Once that is there, you are safe. In case of any dispute, the onus lies on the exporter to prove that this dispute is not valid. This is just created for by the buyer to just avoid the payments. Then the causes that are inherent in the nature of the goods. Suppose that there are certain goods which requires a temperature of say minus 10 degrees Celsius, and you have sent it in a normal container. So definitely the goods are going to get damaged. You are not going to get your payment. So yes, because of that, the losses that are there is not covered by us. Then there are certain insurances like the transit insurance, marine insurance, fire insurance, which are covered by the general insurance companies. So any other insurance which is not covered by us are not covered by us. So these are all taken care by the general insurance companies. Then the agent. See, your contract is with the buyer. But if you have involved an agent in between who is defaulting and the cover is not taken on that, that will again be not covered by us. Then the currency fluctuation risk, as just now Mr. Naveen said, that you need to go in for the hedging, you need to go in for the forward contracts, or it's your bank, generally your bank who takes care of the fluctuation part. Or anything which is not there, if you have not fulfilled your contract, as I just said, you have to make a shipment by say 15th of March or 20th of March, and you don't do the shipment by that date, and the buyer refuses to take the delivery or he refuses to make the payment, then yes, that are again not covered by us. Now, these are basically the terms of the payment wherein the risk varies from the lowest to the highest thing. The first is the advance. That is one of the payments which is the safest mode, wherein you get the payments before you do the shipment. Here again, RBI has clearly mentioned that advance payment means the payment has hit your account before the generation of the BL date. Because at times we had cases wherein they said that it was an advance payment, but the payment has not come and he has sent the goods. But he said, no, it was an advance done and they are sending it. No, advance payment means that the payment has to hit your account before the BL is generated or your goods are going on for a sale. LC, it is, as I said, it's considered to be the safest bet. But then yes, country-wise, it has very huge risk, like for Bangladesh, Nepal, or for some Western African countries, LCs are not a safe bet. But yes, those are definitely one of the safest bet of doing an business transaction. DP or CAD, that's the cash against document, wherein what it means, you have sent the goods, the documents are with you. Unless and until you get the payment, you are not going to release the documents. Once you get the payment, you are releasing the documents. Again, it is said that it's not risky, but yes, this is again a risky. The reputation risk that I said is involved with DP or CAD terms of payment. Because even the documents are with you, the goods are with you, but the buyer may refuse to take the delivery of the goods. So in that case, the risk is associated with a certain cost that you may incur in sending the goods or calling back the goods. So even though most of the exporters they tell us नहीं CAD payment है, क्या risk है, इसमें कोई risk नहीं है, जब तक वो पैसा नहीं देता मैं सामान नहीं देता हूँ. But the problem is कि अगर वो पैसा नहीं दिया, if it doesn't pay you, you are going to suffer a loss, and that loss is the transit loss, the cost that you are going to incur while making a transit to the goods. So yes, but yes, definitely it's the less riskier than other terms of the payment. DA, the riskier mode, because it's a usance period, it could be 30, 60, 90, 120. So definitely you have parted with the goods, you have parted with the documents, and the payment is going to come after 30 days or 60 days or the usance period. So yes, that is the one of the definitely the riskier modes of payment. And OD delivery, where RBI prohibits open transactions to all those exporters who are not status holders. As Mr. Ramesh said in the morning that they gave status holder certificates given by DGFT. So only status holders, certificate holders are allowed to do OD transactions, wherein they send the documents directly, the goods are sent to the buyer. Otherwise, RBI clearly has said that all the exporters have to route their documents without fail through the bank through which they are dealing. So the risk, as I said, the riskier terms of payment, it starts from the least risky, that is advance, LC, DP, DA, and OD. Now, during any underwriting process, there are two things that has to be taken care of. One is the country underwriting. We are the only company or the institute in India who is covering all the countries of the world. There is no restrictions on doing business to any of the countries. We are the only institute who is doing the country underwriting, and our data is sought on a daily basis even from the RBI and other banks. We are providing them a data on a daily basis about the status of the various countries. What is the status as on date? So yes, there are many factors, around 65 to 70 factors, wherein we rate the countries from A1 to D. A1 being the least risky, that's the insignificant risk. The country includes like US, certain countries of the Europe, whereas D is the riskiest country, wherein they are having very high risk. A1, it means they are highly, you can say, politically stable, economically stable. As this stability reduces, the risk increases and our rating decreases to D. Terms of payment, as I explained, yes, the premium depends on the rating of the country. The least riskier country, A1, the terms of payment, least risky, the premium rate is quite less. Otherwise, the higher the risk of the country, the higher the riskier the terms of payment, the premium rate increases. But again, being a government of entity and we have been formed to just support the exporters, yes, our premium raise varies from say around 10 paisa to it goes up to a maximum of around 1.6, 1.8 rupees per rupees 100. As I said, there were two important factors. The first was the country underwriting and the second is the buyer underwriting. We excel ourselves in rating the buyer on again many different parameters. That is again around 70 to 80 parameters on which we underwrite a buyer. And our experience over the last 65 years has said that 99% of the times, whatever we have said about the buyer has turned out to be correct. We have been helping the exporters in informing them whether to do a transaction with their particular buyer and on which terms. It could be that you want it to do on a DA terms, usance period terms. We have been suggesting no, you go ahead for a CAD basis or you do it on advance basis. Still, if you want to do it on a DA basis, usance basis, it's your risk. But yes, we have been helping out the exporters over the years in suggesting them the correct terms of payment of doing a business with a particular buyer. We, as I said in the beginning, that we are guided by IRDA, who is our regulator. So they have even asked us to do an exporter underwriting, which helps the exporter to understand and us ECGC to understand which type of policy is most suitable for the exporter. Earlier we were not doing this, but over the period of time, even IRDA has asked us to do this. Yes, we have been now doing for any new exporter who comes into our fold, who doesn't have any experience. We do an underwriting for them and we suggest them the policy they should take and on what terms of basis they should do the shipment. So that is another thing that we have been taken over the years. And yes, we have been helping exporters on this also. Now we have different covers to cover your transactions. You can take a coverage on a single shipment to a particular buyer to your entire shipment. You have been doing business for many years and you feel that no, I have 20 buyers and 18 buyers are safe. Over the years, I have been taking risk on 2 buyers. So I want to cover only 2 buyers with ECGC. Rest I don't want to cover. You are most welcome. You can get it covered only for 2 buyers. You feel no, all the shipments are safe. Only these particular one shipment is a risky shipment. You are most welcome to come over and take a coverage only on that shipment. Else you feel no, I'll go ahead and do all my shipments will be covered. You are most welcome. You can come and cover. Yes, the premium rate again varies. For a single shipment, the premium will be on a higher side as compared to your whole turnover business. Because if it's a single shipment, it means that you yourself are perceiving a higher risk on that particular shipment transaction. And that is why you're coming for a coverage of that. So definitely the higher the risk, the premium will be slightly higher. If for a particular buyer you are coming, it means that out of the 18 or 20 buyers, you feel that this particular buyer is higher riskier component for me. So I want to cover only this buyer. Hence the risk is higher, the premium will be higher. Whereas if you go for the whole turnover coverage, it means you are sharing your entire business with me, wherein it could be a good business or a bad business, good buyer, bad buyers. When you do that to me, it means you are sharing your good business also with me. You are going to pay certain premium for that good business also. Definitely the premium rate falls drastically. It could come down to even 10% to 12% from a rupee or so if you're going for a particular shipment. You can do it on exposure basis. If you feel you have a very huge transaction and I cannot go it on a particular shipment basis, we can give you an exposure limit. Till that limit, your entire risk is covered. In case if you completely, if you're all the buyers default, we'll cover up to that particular limit. So yes, we are there to cover one shipment, one buyer, entire business on a declaration basis or on an exposure basis. Even if you have a consignment business, wherein you have your own entity set up in a foreign country, but they are ultimately selling it to the goods to the buyers. So you foresee some risk on those buyers. We cover that risk also. We cover that also. We'll cover come here. Services part, we cover the services parts also. You can take over services policy from us, and we are covering that. So whatever transactions you want to do, and above all, if you feel that your transactions is not falling into whatever products we have, we are ready to customize a transaction for you. We are ready to customize a policy for you. We are ready to customize a cover for you. So from a single shipment to your entire business or to a particular customized business, whatever you want, we are at your doorstep. And yes, it goes without saying that we being a government entity, we are regulated by certain things. Any conditions not fulfilled laid down by RBI, IRDA, DGFT or customs are not covered by us. RBI lays down that only status holders can send the documents directly. If you fail to fulfill that, we don't cover. You need to take an post approval, only then we can cover that shipment. IRDA mandates that advance premium has to be there in the account. If you fail to keep the advance premium in your account, we cannot cover that. Likewise, DGFT, they have certain rules and regulations that has to be followed. If you do not follow any of them, we are not able to cover. Likewise, customs, they have certain things. Other than this, whatever may be there, whatever condition or anything is there, we are ready to cover you all. Current global scenario is a very risky proposition. I have been advocating to do the exports, taking a coverage. If you feel ECGC is not the right partner, which I can anytime deny that we are the best in the industry and nobody can match us. But still, if you feel, ECGC is not the right partner, you choose a different partner. But don't do any exports without coverage. Current global scenario, you don't know what may happen the very next moment. We have many cases wherein exporters have got bankrupt just over a night. So do your exports. We are there to support you. Take a coverage from us or from any entity. But yes, our experience of last 68 years, the claim paying ability, nobody else can match us. So that's what I had to say. I'm available here. If you have any queries, you can just raise it. And this is our contact details. My colleagues are all available here. If you have anything, you can just ask me. Thank you.
We'll take queries at the end. Thank you, Mishraji, for briefing us on the services offered by the ECGC. As we all cover ourselves and our families to be protected under the insurance, so like that, we must also take measures to protect our consignments and our company where we are serving or they provide us some business to us. So it is always better to go for the ECGC coverage. And thank you, Mishraji. They have a bucket of offerings and the services based on the customization, and they are ready to provide. Their head office is at Bashir Bagh, Shakkar Bhavan, Haka Bhavan, near the Bashir Bagh only. So we'll move to the FIEO presentation. FIEO is an apex body for all the export promotion councils. Export promotion councils, there are a dozen, 20 plus councils are there, and apart from that, commodity boards also there, like tobacco board, spice board. Then there are councils, APEDA, EEPC, like that 20 plus councils are there, which takes care of export promotion activity. FIEO is an apex body set up in 1965 by Ministry of Commerce, Government of India. It is an ISO 9001-2015 certified organization, and we have 17 offices in the country, 4 regional offices, South, North, East, West, and 1 head office is in Delhi, and 12 chapters in major cities of the country, including 1 in Hyderabad in Telangana. We have membership about 30,000 plus exporters from national level, and indirectly serving about 2 lakhs exporters from the country. Why I tell you this membership is must, the membership of any organization or any community provide us a networking opportunity. How we get connected with our organizations which are serving or helping the industry. So they provide the networking opportunities. They also do advocacy for us. So if there are any issues which has to be taken up at higher level, so these organizations, they provide advocacy also. Apart from that, they do the lot of training sessions also. They give us a platform to promote or get visibility. So like that, this district associations or the state level chamber of commerce are there. So like that, every district there is an association now, every state there is an association. There are at national level associations are also there. So Federation of Indian Export Organization, being an apex body, it provides you national presence. So if you become member of any of the chapter in the country, you will be treated as a member of FIEO, not as a chapter member. Whereas if you go for any district or state level organization, you will be confined to their area only. Whereas FIEO membership will entail you the national presence. So you can take pride privilege of being a national presence of organization. FIEO is a multi-sector organization, whereas the other EPCs, they cater only the sectors which they are allocated. So FIEO being a multi-sectoral organization, it provides multi-sectoral networking opportunities. We do a lot of programs, training sessions on the various sectors, not focusing only on one sector. So this provides you an multi-sectoral networking opportunities. Advisory services, which is one of the core or the interesting area. We have a policy division at headquarters. So there the people who are having expertise, they provide us the advisory services. Events, programs, we have 17 officers, as I said. So all chapters, they'll be doing one or other activities on the export related. So that intimation, you will get it and you will participate as a member from any chapter officers. So it is not restricted, and mostly programs on online or hybrid mode, so that you can join us. Branding and visibility, which is very, very important. So FIEO provides an opportunity and to use name and logo in all your promotional material, as well as on the website also you can say member of FIEO. So that gives you branding and visibility. Stakeholder engagements. This is one area where we have engaged with the central and state government. There we are participating and representing the issues of members also. redressal of issues. So where this, suppose if there are any issues, GST are there. So we are at the GST state and central level also. Banking related, if there are any issues, we can take up with the bankers also. Customs is there. So like that, our representatives are there in the various advisory bodies of the central and state government also. And our DG, he regularly interacts every Wednesday with the exporters to understand their issues, and he tries to answer those. And if it has to be taken at a policy level, we take up with the government of India also. And our representative is also there on the board of trade, which is chaired by the Prime Minister of India. So there, the issues of the exporters that we take up. We are also closely working with the Indian commissions abroad, high commissions, where they also have a commercial section which helps in exploring or expanding the export activities, and their FIEO actively engages with them. We promote and assist exporters uh, by their issues if they have anything. Latest trends on opportunities, goods and services. We regularly send mail. Every week there is a mail being sent to members on the export trends and happenings of that country, or if there are any new initiatives taken by that government, that also we promote it. Next. We offer professional services on the export import, trade information. We do skill development activities also on the GST, banking, packaging, labeling, quality standards. We organize trade fairs and expos where our people they take India Pavilion, and most of our people they will be abroad with Indian delegation participating in the global trade fair exhibitions. Buyer seller meet, which is new now, the reverse buyer seller meets are happening at country. So we are hosting reverse buyer seller meets also, and we have planned around 70 plus in the upcoming year to have RBSM in various places of the country. We did two in Chennai, one in Coimbatore. The last month it was in Vizag, and now in next month, April at Vijayawada, we are planning a reverse buyer seller meet. At district level, with the DGFT and with the support of ECGC and the bankers, we are doing export awareness programs and interactive meetings. FIEO also comes out with monthly and weekly publications wherein the reports and articles and the various initiatives taken by the government for promotion of export activities that are being updated. We have online services also, FIEO.org, and social media and digital presence. We also recognize the outstanding contribution made by the exporters as well as the export facilitating agencies like bankers if they do a lot of export facilitation, or the other agencies which are working in the export facilitation. So Niryat Shri and Niryat Bandhu awards are being presented for those excellent services. This is another interesting area would be of all of you, Indian Business Portal, which is an B2B portal where the local industries they can showcase their offerings, they can have their page on this portal, and the overseas players also they will be posting their offerings, and this will help you get connected with this. Indian Trade Portal, it is an for the startups or new exporters who would like to know the export opportunities, export promotion schemes, and there is a video on these two portals also. We will show you. It provides you a lot of information on the export benefits, what is the export policy for any product. And the beauty of this Indian Trade Portal is that if you indicate any ITCHS code or indicate the product, that it will show you the policy of the government, what is the tariff for that, and a lot of inputs you will get from this Indian Trade Portal. This is the basic information how to export, foreign trade policy, export promotion schemes, banking regulation, HS code what I told you. It has also contains the trade agreements which government of India signed with the various countries, trade statistics, top 25 export market and import sources, which will be of great use to you to understand where our products are going and what products are coming to India. So this will provide you a basic idea where the opportunities are there for our product. Foreign buyers, tender and trade queries also will be posted on this Indian trade portal. We have collaborations with various global organizations and signed several MOUs with them. This is our office address. We are at Shakkar Bhavan, next to the GST Bhavan, Aika or Bhavan Lane, at third floor. We'll just show you two videos, one on the Indian trade portal and Indian business portal. Then after that we'll take Q&A if there are, and then we'll go for lunch.
Welcome to the Indian Trade Portal tutorial. This video will guide you on how to efficiently access and navigate the platform to obtain valuable trade-related insights. To begin, open your preferred web browser and visit www.indiantradeportal.in. This official portal, developed and managed by FIEO, provides critical trade information, including export-import data, product-wise tariff details, and market intelligence. The homepage offers direct access to essential features such as trade statistics, tender and trade opportunities, and export promotion schemes. To explore details regarding export policies, tariffs, duty drawbacks, and other relevant trade regulations, utilize the search bar by entering either a product description or HS code. For example, if searching for leather jackets, enter the term in the product description box or enter the HS code for leather jackets and click on Find. The system will then display corresponding 6-digit and 8-digit HS codes, along with the product description and the option to choose whether you want to import or export. Select the code that best matches your product, choose the export option, and click Search. On the next screen, you can see the list of all the countries. Select up to 5 countries where you wish to view tariff and export duty details. At the moment, you can select up to 5 countries from the given countries. After making your selection, click Next. The system will then display the HS codes applicable to the selected countries. Choose the most relevant HS code that aligns with your product and proceed by clicking Next. The next window will present tariff details for each of the selected country. To access specific export policies, click on the Export Policy tab, which will display a pop-up containing relevant regulations and guidelines. To view duty drawback rates, click on the corresponding tab. A pop-up window will appear, providing detailed information on unit, duty drawback rate along with the product descriptions. Additional tabs provide insights into schemes such as interest subvention, RODI TEP, and other applicable GST levies.
This is being regularly updated, so it is very useful for all of you to go through on this portal and understand the updates on the various products.
You can
and
print tariff
exporting
details
countries.
for the selected countries directly from this page if required. Returning to the homepage, you can access SPSTBT alerts, which are updated on a daily basis. These alerts can be filtered based on parameters such as date range or country name. On the right side of the homepage, a blue-colored tab labeled Trade Tender Queries provides access to country-wise tenders and trade opportunities. These entries are posted as soon as they are received from Indian missions and embassies.
Here,
Users
the
must
login
log
ID
into the
is
portal
needed
to view
to
detailed
access this
information.
portal. You can get register on the FIEO.org by putting your IEC and the email which is registered for that IEC, and you can get the login details.
Another key feature available on the homepage is trade statistics. Clicking on this section reveals India's top 25 export markets, including regions such as SAARC, ASEAN, the EU, and Gulf nations, etc.
This will help you in understanding where the market is for our product, and we can jot down 5-10 countries and explore the
You
opportunities
can select a
there.
specific country, and the system will display trade data from the last 3 years, highlighting year-on-year growth and CAGR trends for the top 25 exported products to that market. Additionally, the Indian Trade Portal provides a dedicated section featuring the latest trade news and upcoming events relevant to exporters and businesses. This concludes the tutorial on navigating the Indian Trade Portal. We encourage you to explore the platform and leverage its features to enhance your international trade operations.
We have developed another portal, that is Indian Business Portal, a B2B platform for showcasing
Did
our
you know that Indian e-commerce exports are Did you know that Indian e-commerce exports are expected to grow to $125 billion by 2030? Federation of Indian Export Organizations, in its constant endeavor to help Indian exporters grow, is pleased to introduce an e-commerce marketplace to support our Indian exporters get global visibility. Federation of Indian Export Organizations, in partnership with Global Linker, launches Indian Business Portal, an international trade hub for Indian exporters and foreign buyers. Indian Business Portal is focused on promoting exports from all Indian states, showcasing India's strength in wide range of products and services, encouraging virtual meetings between buyers and sellers, providing a trusted network to foreign buyers. Finally, fueling the growth of Indian exporters through e-commerce. Buyers and sellers can trade in 4,500 plus product categories. Special focus on empowering Indian artisans, farmers, and producers, dealing in over 370 Indian geographical indication categories. Over 30,000 unique products and services are already listed, and more are getting listed every day. Indian exporters and SMEs can join Indian Business Portal to get a free e-commerce website with international payments and logistics, showcase their products and services in different categories and currencies, accept orders and inquiries from foreign buyers, get support and assistance from FIEO and global linker teams. Join as a seller in 3 easy steps. Visit Indian Business Portal and click on List Products. Verify your importer-exporter code, add business and product details. Activate payments and logistics. Foreign buyers can register too. Find all verified suppliers at one place. Browse from various categories and products. Interact directly with suppliers. Get support and assistance from FIEO. Join as a buyer in 3 easy steps. Register yourself as a buyer. Add your business information. Choose categories that you are interested in. FIEO will promote the marketplace worldwide to help Indian exporters, SMEs, artisans promote their products and services globally. Come on board and create your business profile today on the Indian Business Portal, www.indianbusinessportal.in. To get started, FIEO is inviting more than 5,000 foreign buyers from different countries to register on Indian Business Portal. Join Indian Business Portal. List your products and services now. Register as a seller.
Thank you. So all this will cost you at 7,000 plus 18% GST. This is for the 5 crore up to turnover, and above 5 crore turnover 7850 plus 18% GST. That is the annual membership fee of FIEO. We have with us Mr. Madhukar Babu, Joint Director from the Industries Department. Telangana government has recently announced the MSME policy, and I request Mr. Madhukar Babu to say brief on the initiatives taken by the state government.
Very good afternoon to all of you. Sorry for this kind of intrusion, unscheduled event just before lunch. I'll not take much of your time. Seeing so many entrepreneurs in one place, gives a different kind of high. So I thought I'll also share what is that we have in store for you from Government of Telangana. So it is with this enthusiasm I have come onto the dais to tell you a few things about MSME policy 2024. It will be very, very brief. Before that, please give me please raise your hand. How many of you have a Udyam registration? Thank you so much. So, as you all know, Government of Telangana has launched Telangana MSME policy 2024. Now, it basically aims to address challenges related to 6 important areas: land, finance, raw materials, skilled manpower availability, technology, and then marketing requirements of MSME. Under these 6 heads, we have about 40 interventions listed in MSME policy, which will be available to all of you. I'll not go into details of that, but with these 6 interventions, what we plan to achieve is a 10% increase in gross value add to the state, increase the availability of jobs by 20%, and increase in registration of MSMEs itself by 20%, and more importantly, this ensure the spread of MSMEs in a manner that they are evenly spread across the state. As of now, about half of the MSMEs are registered, clustered around in and around Hyderabad. So the idea is to take them to remote places, and then at the end of the policy period of 5 years, we plan to see to it that at least 10% of MSMEs they graduate to the next level. Micro graduating to small enterprises, small graduating to medium enterprises and medium enterprises moving to the next stage. So that is the objective. With that, we had devised this policy. Now, I'm sure many of you are export related enterprises. What is that you have in MSME policy of Telangana is one is reimbursement of duty on samples that you import from overseas. Up to 10 lakhs, you can claim that reimbursement. And then import duty drawback is another feature that has been incorporated into Telangana MSME policy 2024. And the third important feature is events like this, like as Mr. Kulkarni was saying, reverse buyer seller meet and other interfaces where you can interact with people who matter to you. It could be your exporters, it could be your suppliers, it could be your bankers. So one of the important policy interventions is we are going to organize large number of these kind of events which will facilitate exchange of information and exchange of trade. So these are the few of the interventions that have been listed in MSME policy. Now, if you want, I can go into details, but you can get the details of this MSME policy from Industries Department portal. It's available on the Industries Department portal. You can go through it. tgipass.gov.in. .in. So this is what we have in place. And another important intervention what we have in mind is most of these export related activities they happen in and around Hyderabad. Most of the exporters are situated in surroundings of Hyderabad. We have very less presence in districts. And then most of the information that is traded between potential entrepreneurs who want to become exporters is through the network of available exporters or importers. We wanted to create a point of contact in each of the districts where this information is freely available. We have something called district industry centers in all districts. As Mr. Kulkarni was talking about reaching out to districts, one organization that was left out was District Industry Center. Now, this is first point of contact for all entrepreneurs. So there we will facilitate the availability of information to all potential exporters. In fact, Government of India has come up with a policy of ODOP, one district, one product, and promoting district as export hub. So these two things converge at district level, and fortunately, with the formation of new state, we have all offices migrating to one single location, integrated district collected complexes. So that is where you will find industries department people, and you will also find every other department which is of your concern in that location. The facilitation becomes easy. So I take this opportunity to, while thanking Mr. Kulkarni for giving me this opportunity, I also request him that in the coming days we will, set up these facilitation centers in each of the districts, which is headed by joint director or general manager, district industry center, and then any potential exporter or anybody who wants to import can actually reach out to this place and get all his query resolved. And as we go along, when districts are developed as export hubs, it's a big shot, long shot, but as and when that happens, this will be a place where lot of activity relating to exports and imports take place. So I thank Mr. Kulkarni for giving this opportunity, and also request him to explore this partnership where we can reach out to more and more MSMEs, especially those located in the districts. Thank you all.
Uh, Thank you, Madhukar Babu Garu, for joining and briefing us on the MSME policy as well as the export initiatives taken by the state government of Telangana. In fact, I'm happy to share you that I have been working very closely with all the GMDICs, and they are very cooperative with the FIEO. And in fact, all the district level export promotion committee meetings where the convener is the GMDIC, I have been attending all the meetings and they are really helpful. The collectors and the GMDICs also, they are very dynamic in taking initiatives in promotion of the districts. There was a proposal that we should have cluster development of the product requirement in their area only instead of all coming to Hyderabad. And whatever the ODVP under products are being identified, after interaction with the local industries, the cluster proposals are also being planned for the districts. So where the industries they can develop their activities there itself, and the product value addition required can be provided at the district headquarters only, so that facilitate in growth of that districts. So thank you, Madhukar Babu, for joining us with us. Now we'll take the question and answer. We have with us representatives from ECGC and SBI. So if there are any queries on the officials services, or if you are looking any other clarifications from them, it is open now.
Thank you. So the question is to the Mr. Naveen Reddy. Like I see that you did convey about the hedging liabilities, right? There you said one of the opportunity rather than hedging the liabilities, we can use the discounting of LCs. That is something which I didn't got you. Like, could you please explain me one more time? Like most of the people go for the LC discounting, right?
Yeah.
Then you said that it's better to go for discounting. Sorry, hedging liabilities.
Correct.
So I didn't get that concept. What is the way to look around?
No, what I was actually telling is that whenever you have a liability in dollar terms, it's better to hedge. When there is when there is less volatility in the market. See, obviously, I mean, when there is too much volatility, it's better to keep your positions open. But when there is not when there is literally calm markets, it is better to hedge your liabilities, or even in your if you have any investments, it is better to go for hedging. That's what I was mentioning.
Okay. Yep. Thank you. And one more, sir, like Mishra, sir. Yeah, Mishra, sir. So I see that there is a lot of information that you shared as part of the ECGC, and we as a new exporters, where we would like to see our future in the ECGC part of it to secure ourselves. Like, is there any one place to go through all the trainings that what ECGC is providing?
You can visit our website,
Okay.
or you can get in touch with us over the phone, or you can even visit our office. Or if you can say where you stay, we can visit your place and we can just guide you through how to start get in touch with ECGC. But yes, prior to that, as this program flow was there, first thing is that you have to have your I code. And then as sir said, MSME. MSME certificate. As sir raised the issue of MSME, so I would just like to say, even Government of India has come up, wherein for exporters who have got their I codes in the last 3 years, 10,000 rupees premium is refunded back. ECGC premium. If you are holding our policy, and your premium up to 10,000 is refunded back by the Government of India. Likewise, many states have different policies in place, wherein certain amount of the premium that you pay towards ECGC is refunded back to you. So any doubt you have, anything you have, you can just get in touch with us. We can guide you through the entire process.
Okay, thank you. One second, sorry, one last question. I'm sorry. Yeah. So to the Naveen sir, like again, like for the startup kind of, like if we don't have any background in the MSME side of it or any something kind of exports, it's completely new, altogether new. So does SBI Bank offer something new as a for a startup kind of support? Like do they also fund us?
Have stand up. either with us, or you can directly visit our branches. I mean, we do support startups quite a bit. I mean, we are funding aggressively actually in Bangalore area, in Hyderabad too. I mean, we have funded many startups here.
Okay, okay, got it, sir. And one more thing did I seen in your presentations that let's say if there is a requirement now, let's say we being as a startup, nowadays I do see the order values are at the higher end. Like let's say someone is asking for 20 or lakhs or 30 lakhs order, which is the value of it,
Okay.
and whereas we don't have that amount, by showing that order value, would
Yeah,
we
yeah,
be
yeah.
also
You
funding
can
that?
take, yeah, you can take, I mean, order financing also from us.
Okay,
That is available.
okay, great. Thank you, sir.
And just to take it forward, just like to mention here that many of the banks, they consider ECGC policy as a collateral for the finances that they provide. So because as you said, yes, startup or a new, completely new entrant into the export, they may not have that sufficient collateral to fulfill the needs of the bank. So at that place, ECGC policy is taken as a collateral also to cover the risk of the financing that any bank is doing.
Good afternoon, sir. I have a question for Mishra, sir. So actually, I am a member of ECGC already. Like we took for last year, we are an export company. But whenever I reach out to ECGC member, I have some set of buyers, but they are not registered in ECGC portal. Like they check the buyer and they say the buyer is not available. So at that time, it is a big hassle to continue with the buyer for an order. So what is I didn't find any solution for this.
You are already a policy holder, ECGC
Yes, I
policy.
took last year, but this year I didn't get renewed, but last year we had.
See, that is what we said, my buyer underwriting department. If you visit our website and if you don't find a policy of a buyer's name, so it means that the buyer is not in the defaulter list. Because on our website, we only have the defaulter list. That those buyers are named there who are in the defaulter list of the ECGC. Or in a way, we call it a buyer specific approval list. So those buyer names are listed out there. So just if you can see, as I said, we do a buyer underwriting on more than 75 parameters. We have tie-ups with agencies in different parts of the world who go and find out about the buyer. So if ECGC refuses, it means that yes, the buyer is not available, because we want the exports to grow. We want the you to grow. So we don't have any way in saying that yes, no, we don't have the buyer, we don't want to do this. No, we want to cover the risk that you are taking on a particular buyer. So if ECGC doesn't have the buyer details on the website, it means that the buyer doesn't exist. Because there are many buyers who are exist only on paper. Whenever we have sent our agencies, we have asked our agencies, they have visited there, they have even provided us a proof that see, I have visited here, these are the companies who are there, but this particular company is not there. So our policy, that's why we say we'll guide you through to those things about the policies that you have, about the buyer that you want to know, whether you should do a transaction with them or not.
Actually, the thing is, we did a transaction with them. We got the payments also, but ECGC says the buyer is not a registered member in the portal. Like, for example, I give a buyer's name, they check in their portal, and they say that this buyer is not in the portal, so we don't have information of the buyer. So you can do or not sure.
No, we will not say, if we don't have a registered buyer with us, it means it's a new buyer for us.
Yeah, new buyer.
So we will get the details on that buyer. It's not that we'll get the details on that buyer and then we will do the underwriting on that. If somebody says, no, we don't have the details on the buyer, we'll not cover the risk. No, it cannot be. Especially from our branch, it cannot be the answer from our side. Yes, we may ask you for certain additional information. We may ask you for certain additional information, but not underwriting a buyer is possible only in that case that even after giving all the informations, there could be a thing that you have a buyer, but that buyer has not dealt with EC, because we have a record of around 5 lakh active buyers in our database. So those buyers have dealt with some or the other customers across the country. Of the 46 branches, they might have dealt with some or the other customers. So that's why they are in our records. It could be that the buyer that you are getting is the 5 lakh first buyer. So they are not in our records. So we may ask you for additional info, but the only thing that we need from you to doing a buyer underwriting is the address, name, address, email, phone number. That's all. These 4 parameters, if you can provide us, or if additionally you want, that's the registration number. Otherwise, these 4 parameters, if you provide us, we'll go ahead. In case if the buyer, our agency says, we don't have anything, then we'll ask you for additional information. If you're not able to provide that additional information, only then we will refuse. Otherwise, we go for the buyer underwriting. It could be that buyer is new to us, but we'll go ahead with that.
Sir, even this, fresh commodities are also covered in ECGC or only the dry ones?
Any commodities which is not banned by Government of India is covered by us.
Acha. Okay.
Anything which is not banned by Government of
And
India.
what type of payment terms are covered, sir? Like if it is
All
like
the payment terms.
100%,
All the payment terms. Advance, you don't need any risk.
yeah, advance no need, but
Other than
whatever the
this,
TT,
all the payment terms, all the payment terms, all the commodities, all the countries except Pakistan, where we cover only pharma goods, pharma and drugs. That's all. Medicinal drugs. Other than this, we are covering all the countries, all the goods, all the buyers. Buyer is in a defaulter list, then will not cover. But yes,
Okay.
there is no ban from our side on any commodity or any country
because
or
we do
terms of
get
payment.
from Dubai for this, fruits mostly abhi season chal raha hai. So mostly fruits ke liye Dubai se aata hai and their payment terms are like maybe 30% advance and then the rest on after going there container opening and all this is this type.
That is the DA usance. So if you are doing a transaction of 100 rupees, 30% is advance means you are getting 30 before you are doing the shipment.
Yes.
So 70 rupees. So we'll cover 70 rupees. We'll charge you premium only on that 70 rupees, not on the entire 100 rupees.
Yeah.
Only that
So
70
usually
rupees.
it is around 1% which you're charging, right?
It depends on the type of the policy that you have taken, the amount that we are covering, the risk that is there. But yes, the premium rates vary in that percentage only.
Thank you so much, sir.
Thank
So Naveen, sir, I have a question for you. So we are already working with one bank, but if we want to shift because our AD code everything is registered under with that bank.
Yes.
So if we want to shift the bank now to SBI, for example, so
Yeah.
what is the process for that?
Uh,
For this international trade? So so the process is like we need to open a current account. So then you will provide an AD code, and we need to change those AD codes in all the ports which we have registered already. Acha. Okay. Thank you.
Sir Mishra ji, we were discussing on various payment terms, the LC at site. Now, what about LC payable not at site but at the discharge ports? Because
Yes, it's
does-
covered.
Yeah, because the verification will be done against the documents verified at the discharge port.
But it will be routed through bank
Bank, yeah,
and it will be paid through bank.
great.
It's covered.
Second,
That's what I said. All the payment terms, which is as per UCP DC 600, are covered by us.
okay. Now we had an issue where the product is from Kazakhstan, destination is China, the originating the LC is from a Singapore-based bank. Payment terms are 95 at site, 5% against CIQ, destination port, and then the markets were dropping, and the payments were not. It took some time. In this kind of a situation, does ECGC cover? Because we feel the product was good. Loading port SGS report says perfect, but at CIQ it's about 5 grades less.
Sir, it depends. See how it goes now. You have a buyer, means you are doing basically a merchanting trade wherein you are sourcing a good from a different country and sending it to a different country.
Yeah.
Yes, we cover the merchant trades. As per LC means that the bank has to honor it, whatever may be the situation. they don't depend on the market values or the market conditions or the buyer conditions. If an LC is opened by a bank, it has to be honored. As I
Irrevocable.
said, the example of generally Bangladesh, what happens in Bangladesh, that doesn't go that way. They depend on the buyer. Whether the buyer is going to make the payment, only then they will honor the LC. Otherwise, they will raise some or the other discrepancies.
Okay.
So as per UCPDC, LCs, if opened by a bank, has to be honored. If it doesn't honor, yes, going by to the merits of the case, we cover it and we pay the claim.
Okay. Thank you.
Yeah, I think that's it. Please feel
Yeah.
free to ask
Hello.
any queries.
Yeah, hi sir. This is Venkatesh. So basically, my questions comes from basically we are working with a lot of D2C brands, and they are into e-commerce exports. So how ECGC can help these e-commerce brands, because they might be sending in the small shipments, right? And each order worth of some 5 to 10 lakhs range, and they will be lying with the FBA godowns over there, either with Amazon or Walmart, and the payment comes in like the timely intervals. So how can ECGC will help this pattern here?
We just need to understand how the transaction goes, because see, there would be certain conditions, terms, and or contract that you would be having, that irrespective of the period whenever they are getting the payment, they will be paying you the payment, making
sir.
you the payment.
Correct.
So yes, till that portion, yes, we'll cover as per that terms of the payment. We are not depending. See, we cover the risk of the payment making entity.
Got it, sir.
It doesn't depend. Yeah, we have a different policy wherein, as I said, the consignment policy, wherein your own entity is based out there and they are sending it ultimate wise. No, in this case, you are sending it to one particular buyer,
Yes.
and that buyer will pay you on a timely frequency or whatever is as per the terms of the contract.
Mm.
He or she may be getting the payment as per their own internal contracts. But then, yes, we have to understand that basically to cover any transactions, the first thing is we look into how that transaction is going.
Understood.
And that stage itself will tell you, we may even suggest you to reroute or go change, make certain changes in that also, so that it gets covered by ECC or any other company.
Right, sir. And one more question is like in regular business, we do deal with like a lot of new importers across US and Europe. So they might not be registered with like ECGC. So even sometimes we do the background verification with Coface or Atladis, or sometimes we use WTC to inquire into the buyer, because they are not ECGC members. We are not able to get the coverage for them, and it's 100% risk for us.
No, actually, as I just explained to ma'am, it's not about that buyer registered with us. It's about you being registered with us. If you are registered with us, you give us the buyer details. We will do the buyer due diligence.
Okay.
And after doing the due diligence, we'll give you provide a coverage to you.
Okay. Okay.
And as on date, yes, we have the maximum buyer base with us in the country. So whatever company, other company may be there, but then depending the buyer underwriting and other process, yes, that's definitely the best with us. And we charge a nominal fees.
Okay.
We charge only 500 rupees for doing a buyer due diligence. Once you take our policy, so there are certain conditions of the policy. You fulfill those conditions, and then we per buyer you just need to pay us 500, and that also inclusive of GST. So 18% you can take an input credit. So it comes to around 430.
Correct.
So buyer may not be registered with us.
Yes, sir.
But then once you take our policy, you give us the details, we will do the buyer due diligence, and we ensure that they are getting registered with us unless and until we have a bad experience with them.
Understood. Even if that is a bad experience, you will share with us.
Yeah, if it's a bad experience, we'll let you know. Okay,
Sure.
This buyer has already defaulted to these many customers.
Understood.
So it's no use doing the transaction. If you still want to do the transactions, you do it on advance basis. Let the payment come and then you send the goods.
Okay. Yeah. Thank you, sir.
Hi, sir. My question is Naveen, sir. So, my question is like we have exported some material to merchant transaction to Bangladesh. So, what happened? So, we got an order from the Bangladesh, but we exported from the material from Thailand to Bangladesh. So, my question is that in this case, the Bangladesh is a ACU country, and Thailand is a non-ACU country. In this case, how can we get the remittance? So, what is the process for the remittance?
Question is
Sorry, sir, your voice is not. No, sir.
Yeah, is it audible now?
Yes.
I think your question is on trade finance. Is it okay if I connect you with one of our trade professionals after this meeting? Because I'm not primarily into trade finance or in credit, because I'm a dealer. I mean, I do deal with the market. So unfortunately, I don't have answer right now. But I'm sure, I mean, after this meeting, I'll connect you with one of our trade finance expert.
Okay, sir. Thank you. And so, Mishra, sir, one more question. Uh, Here only, sir. So for same thing, what is the time period for the for inquiry this customers buyers background? So what is the time period for how many days do you take for the confirmation of the buyer as a genuine or in a default or like that?
So generally it takes around 7 to 15 working days, depending on the country where the buyer is located. So what we suggest, the first interaction that you have with a buyer, because see what happens, you will get an order, you will manufacture and prepare that order. So you will have a time lag of around 15 to 20 days. So that will be after you get a confirmed order from the buyer. So we generally suggest that whenever you have a first interaction with a buyer, you submit the application with us. Because depending on the country, maybe US, Europe, we may give you a report in 5 to 7 days. But if it goes to the African countries, West African countries, or certain restricted countries, there it may take some time. So, but yes, generally it ranges between 7 to 15 working days.
Okay, thank you.
సార్ నవీన్ రెడ్డి గారికి సార్ క్వశ్చన్ ఇది సార్ ఐఎమ్ కంఫర్టబుల్ ఇన్ తెలుగు మాట్లాడచ్చు కదా సార్
షూర్ సార్ షూర్
సార్ యాక్చువల్లీ నాకు వచ్చేసి నేను స్టార్ట్అప్ కంపెనీ సార్ నాకు 3 months అయింది ఓల్డ్ ఇప్పుడు వచ్చేసి నాకు సెల్లర్ వచ్చేసి దుబాయ్ సౌదీ అరేబియాలో ఉన్నారు అయితే బయ్యర్ వచ్చేసి టర్కీలో ఉన్నారు సార్ సో టర్కీ వాళ్ళు ఎల్సీ ఇవ్వడానికి రెడీగా ఉన్నారు సో నా ఫైనాన్సింగ్ లేదు నా దగ్గర సో దీన్ని ఫైనాన్స్ చేయగలరా
Sir, unfortunately, there are few countries where we cannot finance. I mean, order finance we cannot do. I need to check. I think even Turkey is one of the country where I mean, I believe that I mean we don't have no great relationship with those banks.
Okay.
I'll check and I'll get back to you, sir. Because there are few countries like Iran, Iraq, mostly in in the Middle Eastern part and the Western African countries where. Due to some restrictions from government, I mean, we don't have trade finance with them.
Okay.
But I believe Turkey is one country where we don't have good relationships with their banks. But I'll certainly find it out and help you out.
Yeah. Okay, sir. Thank you, sir.
Hello, it's my question to Mr. Sir. I'm here, sir. So actually, we have a European buyer, existing buyer. We are renewing the policy every year. Even then, you're taking too much time. It's beyond 15 days to get the report. European customer.
It's a regular customer?
Yes.
Then you don't need to get it renewed every year, ma'am. Because
No, we take it on a case to only like shipment to shipment basis. Even then, you're taking it's around 21 to 30 days.
You are from which company, ma'am?
Soham Exim.
Okay. Okay, yeah.
Mr. Sanjay will be contacting you.
Yes. No, but see, if I give you a credit limit and that is valid for 1 year.
Yeah, that's
if you
true.
don't do any shipment, even if you have done one shipment, it gets automatically renewed. Now, suppose if I have given you a credit limit of 1st of January, so that is valid till 31st of December.
Yes.
Now,
that's correct.
in between, suppose you do a shipment on say 15th of December. This will automatically be renewed till 15th of December till next year. So you don't need to get it renewed every year.
No, sir, we are renewing our customer for European sector, and few customers we are not getting a report at all.
Yes.
And we are dropping the shipments.
Okay, ma'am, I'll just get you because my underwriting team is also here. I'll just take up your case and I'll get back to you.
Mr. Sanjay keeps on calling you.
Yes, I know.
It's becoming too hectic and we are dropping the shipment at all.
No, I'll get back to you on this because it generally doesn't happen that way. You don't need to get it. If you do one shipment, that's why we say, if your expiry date is on 31st December for a shipment, if you do it on 30th December also, it will automatically get renewed for next 1 year.
No, actually he keeps calling you people, and after 21 days also buyer gets angry and he says why the shipment is not happening. We are saying okay, we keep quiet.
Okay, ma'am, I'll just get back to you. Just now, just after meeting, I'll get on this.
Please.
Yeah.
Thank you.
Sir, hello, sir. Sir,
Yeah,
my query is like, how has the experience been supplying to startups, even in the offshore market? That's the first question. And second is like, now I'm thinking to supply to a defense startup, and they don't have longevity, and then that defense company is going to supply to a export market. So whether my transaction qualifies as a deemed export, and how does ECGC would like to handle this? Something gray area looking for me.
First thing is that whether you are going to give your goods to the same startup in the country itself.
Yes.
So that will qualify as an domestic exports.
Okay.
So as of now, we are covering domestic exports, but we are covering domestic exports to only our those exporter clients. Because as we said, we are Government of India and we have been set up for export credit coverage only. So government has approved us to cover domestic exports only for those clients who are doing export credit coverage from us. Now coming to the second part, yes, if you are doing it, exporting it to say a SEZ or EOU units, so that may qualify as a deemed export. And yes, we cover that. We cover deemed, we cover merchanting, we cover LC, non-LC, all the transactions we cover.
Okay.
But I just need to understand how you do it so that we can further suggest you how to go ahead with that coverage.
Sure, I will connect.
Yeah, yes.
Hi, my name is Sudeep. My question is to Mr. Naveen. I'm here. Yeah. See, my question's on basically currency hedging. See, 6 months ago, we had paid advance for a machinery where they wanted it in euros. Back then, it was 88 rupees per euro.
Correct.
And it didn't look like we needed to hedge, right? The euro was dipping all along.
Yeah.
Now, the machinery is due in June. Already, the price is shot up to 95, 96. So one, when we're making such, far out, 9-month, 10-month delivery capital goods investments, how do you plan for it? And two, now that we are halfway in it, is there something we can do now, between now and June, to hedge any further risk?
Yeah. I believe, mostly, if you have such a scenario, I believe that, you can go for a partial hedging, because 6 months down the line, nobody expected that, euro will appreciate in such a way that, it almost shot up by 500 basis points. Now, if you ask me, 2-3 months back, I would say that, it's better to keep your positions open, because, the entire European economy is not looking that good. But whereas, in the US, everything is rosy. Their economy is growing, their inflation is under control. But again, in the Europe, if you see, the inflation is still more than their comfortable levels, and the economy is not that performing well. So yeah, unfortunately, in the last 3 months, it seems like every day is an event day, and yeah, I think markets kind of digested it. Because markets keep on hearing that, Trump, on every alternate day, he's, imposing some tariffs on some other countries. And then the very next day again, he is going back on his words. So somehow I believe that, market have digested it, and, they have come out. I think market has overreacted maybe in the past 2 to 3 months. And then the market, and right now I think the market has come into senses, and it is kind of, coming in into the original intrinsic value. I believe that right now, I think it seems like still the euro and other currencies might appreciate in the next 2 to 3 months. So better, I would suggest, is to go with forward hedging. If your company is a little bit comfortable, or if it is has risk management policy in approved risk management policy, maybe you can go with exotic products also. That uh, mostly, it might eliminate these kind of events.
Okay, and that can be done in between, like right also.
Yeah. Right? Even now you can do it.
Hi, sir. My name is Vijay Kumar. My question to Naveen Reddy garu. Sir, my company is a startup company. I want to avail pre-ship finance, and what are the documents to be furnished? Is it a secure or unsecured loan? So I'm doing the first consignment. So how can I avail the finance? Can you please guide me? Your voice is not audible, sir.
Is it audible now, sir?
Yes.
May I know the product that you are exporting and the country to which you are exporting?
We are actually doing exporting all agri commodities like fresh fruits and rice, spices.
Okay, so I believe you have approvals from Food Corporation of India and the licenses from that particular country. Yeah. So mostly right now, sir, I mean, depending upon the case-to-case basis, we are offering, unsecured loans and secured loans also. I have to see, I mean, in which part you come across. I mean, maybe, I mean, if you are okay with it, I mean, we can go with a secured loan. Or in the other way, I mean, you can take CGT MSC coverage and we can finance through them also.
Thank you, sir.
Hello. Here just I would like to add, wherever you face problem in financing, as I said, ECGC policy serves as a collateral. So in those cases, as he rightly said, yes, there could be certain cases that comes up, whether you may get a financing or secured financing. So secured financing is going to be on a slightly on a higher side, cost probably on a higher side. So in those cases, you can take our policy and go for the financing. So that serves as a collateral. That depends on your how you convince them. But yes, few of the SBI branches accept it.
No, if you have, I mean, a coverage from ECGC or any other institution, we are happy to finance. Yeah, it depends upon your case-to-case basis. Some products, I mean, we are even offering 90% of your entire order.
I'll just give how it works. See, now you are going for a financing with a bank. Now you want as a financing of 5 CR. So bank is going to see a risk of 5 CR on you. Now what happens? The bank will say, I need a security of 5 CR. So you will come to me and you will take a policy of 5 CR. Now bank 5 CR is secured from ECGC. We cover up to 90 to 95%. For MSME and small exporters, we cover 95% of the outstanding. For normal high-end customers, we cover up to 90%. Now, in certain cases, even bank has insisted that their 5 CR, our 5 CR policy means it's only 4.5 CR. So we increase it and we gave 6 CR. Now they will not be just giving thing on the basis of just 5 CR. They will ask for your order copy. That particular order may be say of 50 lakhs. Then they will ask you to obtain a coverage of 50 lakhs. So that cover we will give you on a buyer. On a buyer will give you say 1 CR. So you can show that letter, yes, see this buyer is covered for 1 CR. In case your 50 lakh doesn't come, ECGC will pay me and that will be paid to bank. It will not be paid to you. So in that case, so this is how the financing works with the bank and ECGC.
हेलो मिश्रा सर हाय सर मेरा क्वेश्चन है आपसे एक्चुअली रिगार्डिंग आरसीसी 2 कंट्री
जी सर
एक्चुअली आरसीसी 2 कंट्री में व्हाट इज द प्रोसीजर ऑफ द आरसीसी 2 कंट्री टू गेट द क्रेडिट लिमिट ऑफ बायर बिकॉज my some buyers 5-10 buyers I'm talking about 5-10 buyers we are doing business last 8 years but ECGC rejected for credit limit 2-3 times for that buyer because we are getting payment in time every time payment in time we are doing business with the same buyer name मतलब suppose our buyer का सब कुछ नेम है तो मैं उसके साथ बिजनेस भी कर रहा हूँ बीएल भी बना रहा हूँ डॉक्यूमेंटेशन भी कर रहा हूँ पेमेंट भी उसी से बायर से आ रहा है बट ECGC कंपनी बोल रही है कि इनसफिशिएंट एड्रेस ड्यू टू इनसफिशिएंट एड्रेस क्रेडिट लिमिट हैज रिजेक्टेड मेरे को एक चीज समझ में नहीं आ रहा है कि हम कैसे उसके साथ बिजनेस करें या न बंद कर दे क्या करें
सर आपको देखते ही मैं पहले ही अपनी टीम से बोला था कि वी आर गेटिंग होल्ड ऑफ यू सो वी हैव नॉट टू लीव यू यहाँ से आपको जाने नहीं देना जब तक कि आपके ये है बिकॉज वी एक्सपेक्टेड दिस सर RCC2 countries जो है that is the riskiest of the countries. Even though the payment experience is good, defaults बहुत कम होते हैं, लेकिन जब हम पैरामीटर चेक करते हैं
जी
इकोनॉमिक और पॉलिटिकल सिनेरियो पे तो वो बहुत रिस्की होता है. सो फॉर डिसाइडिंग ए लिमिट ऑन दैट मुझे 2-3 चीज चाहिए. वैलिड परचेज ऑर्डर, आपका पास्ट एक्सपीरियंस
जी
और कॉन्टैक्ट डिटेल्स. जो उस कंपनी का वो एक आदमी का कॉन्टैक्ट डिटेल्स चाहिए. अगर ये 3 चीज मुझे बता, क्योंकि जनरली मुझे हम लोगों को ये नहीं मिलता है. इनमें से एक्सपीरियंस आप दे सकते हैं, मिल जाता है कभी कभी, लेकिन परचेज ऑर्डर, क्योंकि होता क्या है सर, बिजनेस है, व्हाट्सएप पे आ गया, हम लोग भेज दिए. तो उस केस में भी हम लोग सॉल्यूशन जो हम लोग देते हैं कि यू गेट एन, इफ यू आर गेटिंग एन ऑर्डर ऑन व्हाट्सएप, यू विल बी रेजिंग एन इनवॉइस.
या
You get a signed invoice because we need something concrete. Because जब हम एजेंसी से बोलते हैं कि मुझे इस बायर के लिए कुछ करो, तो even they ask us the same thing. क्योंकि सर उन कंट्रीज में हम लोग आपसे सर 500 चार्ज करते हैं, लेकिन सर जब हम जो रिपोर्ट के लिए पे करते हैं दैट गोज अप टू से 45,000, और ये उन कंट्रीज के लिए. तो हम लोग जब वो देते हैं तो उस वक्त वो बोलता है कि सर आपका तो ठीक है, आप मुझे तो पैसा मिलना, आप ऑर्डर दे दोगे, लेकिन मैं आपको रिजल्ट नहीं दे. तो उस वक्त मुझे सिर्फ 3 चीज चाहिए. आपका पास्ट एक्सपीरियंस, परचेज ऑर्डर जिसमें कि क्लियर हो, एड्रेस, नाम, पता, कस्टमर का नाम, फोन नंबर, ईमेल एड्रेस कुछ हो, और आप ये 2-3 चीज आप मुझे दे दीजिए, मिलेगा लिमिट. क्योंकि हम लोग जो भी लिमिट रिजेक्ट हो रहा है वो सिर्फ इसी वजह से.
सेकंड वन सर, एक्चुअली मैंने लास्ट मंथ एक एक्सपीरियंस किया था. एक नाइजीरियन बायर था हमारा, जिसने मुझे एक डिटेल व्हाट्सअप किया. ECGC को हमने क्रेडिट लिमिट के लिए रिक्वेस्ट किया था, CLA एप्लीकेशन किया था. ECGC ने वहाँ का नाइजीरिया का जो ब्रांच है उसने एक लंबा सा डिटेल भेजा था जो हमारे बायर को फिलअप करके देने के लिए. मुझे जो लगता है कि कोई बायर वो डिटेल नहीं प्रोवाइड करेगा, बिकॉज उसको ECGC से लेना देना कुछ नहीं है.
सर नहीं, ये आपका फीडबैक, ये फीडबैक सर हम लोग अपने हेड ऑफिस को भी दिए हैं.
क्योंकि वो बायर से मुझे आया था कि व्हाट इज दिस, उसने मुझे क्वेश्चन किया था, मैंने बोला छोड़ दो सर, आप इग्नोर करो, हम देखेंगे. लेकिन ECGC अगर इस टाइप से अगर रिक्वेस्ट देगा तो कोई भी बायर नहीं करेगा और हमारा ECGC रिजेक्ट होता है.
नहीं सर, इसमें ECGC नहीं, इसमें क्या होता है सर, हम लोग जो रिक्वेस्ट, आपका रिक्वेस्ट या किसी का भी रिक्वेस्ट आता है तो वी जस्ट सेंड इट टू द एजेंसी.
जी.
अब बैकएंड पे एजेंसी कैसे करता है ये हम लोग को नहीं पता चलता. ये फर्स्ट टाइम था जब आपसे पता चला कि वो ऐसे ऐसे है, तो उस केस को हम लोग टेकअप किए हैं. मोस्ट प्रोबेबली वो रिजॉल्व हो जाएगा सर, वो नहीं आएगा वैसा.
नहीं सर, थोड़ा बस ये हो गया तो हमारा मैक्सिमम लास्ट 2-3 मंथ से वी आर एक्सपीरियंस की आउट ऑफ 10 बायर्स 5 बायर्स हैज बीन लिमिटेड.
नहीं सर, इसीलिए आपको देखते ही मैंने अपनी टीम को कह दिया था कि सर को आज जाने मत देना जब तक ये पूरा क्लैरिफाई नहीं हो जाता है.
ओके सर, ओके, थैंक यू वेरी मच. थैंक यू सर. Naveen sir, my question, actually sir, मेरा एक buyer from Tanzania, they want to make the payment to in INR in India. Actually they want कि they will make the payment to Indian bank will make to payment to our bank in SBI. Suppose our account in SBI, so Indian bank will make to payment in SBI in INR. Our bill is in USD. Is it accepted sir?
Yes sir, it is quite it is rightly accepted here in SBI.
Okay.
I think it is accepted in almost all the banks, but SBI is doing that.
But FIRC, I think you need
yes
from that bank.
Yes.
Okay, thank you very much sir. Not very.
Mr. Ji,
sir, okay sir, thank you sir.
Mr. Ji, you say 15 to 20 days you require to take the credibility report of the buyer. Now, if we suffice you a DNB, Dun and Bradstreet report, which speaks about the credit worthiness or the healthiness of the company, especially by African countries or something, will that be accepted? Because sometimes shipment period, it has to be 1 week from the date of opening of the LC, or situations like that.
Sir, yes, that will help us, but we'll not base our
depend on DNB reports, sir.
Yeah, we take care. See, actually, we don't know who are the agencies, but yes, they are DNB, Mira, and COFAS. These are the agencies that, but we have around tie-ups with more than 50 agencies.
Okay.
So we don't know, because that is our underwriting is situated at head office. 7 to 14 days that I have talked about is for a new customer who is totally new to us. It could be that we already have a customer in our base and the report is the latest one. So you may get your means we will give you a feedback on the same day itself. So it's for a totally new report. Yes, you providing me a DNV report, yes, that will help. But still, we will do our due diligence from the different parameters because reporting is one thing. We have around, as I said, we have around 60 to 70 parameters, and report is one of those parameters. So yes, but that will help us. No doubt that will help us. And this is on a higher side. 14 days is on a higher side.
Okay.
We generally have a tie-up which says that no, you have to give it within 3 to 5 days. But then these 7 to 14 days is for a completely new buyer for ECGC.
Thank you.
Thank you. I think we may continue the session, the question answer at lunch also. They'll be available with us. So we'll conclude it. I request Mr. GVSS Ramprasad, the founder Mother India Group, to present a memento to Mr. Mishra ji. Mr. Vijay Kumar to come forward and present a memento to Mr. Naveen Reddy. Vijay Kumar, come. Left. Mr. Abbas Khan of MAC Group to present a memento to Mr. Madhukar Babu. Thank you. With this, we'll conclude the session, and I'm happy to propose a hearty vote of thanks on successful conclusion of this seminar. I thank the speakers of the session, Mr. Ramesh, ITS Deputy DGFT, Sri A.B. Mishra ji, AGM and Branch Head ECGC Limited, and the team from the office, Mr. V. Naveen Reddy, Manager Treasury and RTMU team. I also thank Mr. Chandramouli Garu, AGM SME. I thank all the speakers for sparing their valuable time and addressing at the seminar. I also thank the logistics service providers for providing the backdrop and other audiovisual facility for this program. I also thank Hybiztv for giving us live telecast of the seminar. I also thank the photographer and the other hotel management for providing the facility. Big round of applause to all of you for having with us for all the throughout the session for the seminar. Thank you one and all. I thank my colleagues Mahesh and Balaji for all their help. Thank you. Thank you. I request all of you to join for lunch.